All right, everybody. JPMorgan Chase & Co. They just released their mid-year outlook, and let me tell you, it's got tongues wagging out there.
Yeah, it's causing a bit of a stir.
You know how everyone loves to kind of like predict doom and gloom for the economy? Well, this ain't that.
It's actually quite a refreshing change of pace, I'd say. They really dug into the data and came back with, surprisingly optimistic outlook.
And for our listeners, that means we're going to skip the econ jargon, right, and get right to the good stuff. We're talking actionable insights, the kind of stuff you can actually use to make sense of where the global economy might be going.
Yeah, think of it as a cheat sheet for the global economy.
Exactly. So bottom line up front, would you say their big takeaway is that the global economy is actually like holding up pretty darn well?
Definitely.
Yeah.
It's showing some surprising resilience despite all the headwinds.
Which is kind of wild when you think about it for a second, right? I mean, everyone and their mother was bracing for a full-on recession.
Right.
And now JPMorgan is over here drawing comparisons to, like, the 1990s.
Yeah, that's the comparison that really makes you, it makes you sit up and take notice. Because you remember the 90s, right? The booming tech scene, all that innovation. And yes, even higher interest rates sound familiar.
It does feel a little like we're rhyming with history, even if it's not exactly repeating. So are they really suggesting that we could be like on the verge of another 90s style boom? But this time it's AI, not the internet, driving the change.
That's definitely one way to read it. Their analysis seems to say that we could actually see a period of stable growth, even with higher interest rates, just like back in the 90s. And one of the big factors they highlight is, U.S. household income. It's actually up almost 6% this year.
Whoa, 6%? That's huge.
Yeah, it's pretty substantial. And what that means is that people are spending, right? Even with inflation being, a thing.
It's counterintuitive for sure. Inflation is like, public enemy number one these days, right? But spending is still strong.
It is. It really speaks to this kind of unusual mix of factors we have going on in the economy right now. You've got the post-pandemic recovery still doing its thing. You've got all these global supply chain shifts. And then you layer on top of that this surge in tech innovation, particularly with AI.
Right. It's like a whole new ball game.
It's a perfect storm. Or I guess maybe not a storm, maybe more like a perfect breeze. Anyway, the point is it doesn't fit neatly into our usual recession playbook.
Okay, so maybe we can all, take a deep breath here, relax a little. The economy is not collapsing. But let's be real, it's not all sunshine and roses either, right? Inflation hasn't exactly, poof, disappeared overnight.
Very true. And the report does acknowledge that. They say inflation is proving to be, stickier than they initially thought. It's probably going to settle somewhere between 2–3%.
So not ideal, but also not the complete disaster some were predicting. What I find interesting is that they actually suggest this level of inflation might not be the kiss of death for the stock market.
Yeah, and historically, that's been the case. As long as inflation stays, relatively predictable like they're forecasting, it hasn't really derailed stock market performance in the past.
Well, that's good news for those of us with, a bit of skin in the game. But we're just scratching the surface here. There are some pretty big what-ifs hanging over all of this.
Yeah, what-ifs is putting it mildly, right? Like, geopolitics alone feels like the whole world's just one spark away from, I don't know.
It's definitely a bit of a tinderbox out there.
No kidding. Every time I turn on the news, it's like, oh, great, what's blowing up today? So how do they even begin to factor in all that, global mess?
It's a fair question.
Yeah.
They actually spent some time looking at historical data, really digging into the numbers. And get this, they found that broad stock markets, they actually tend to bounce back from these kinds of geopolitical shocks.
Okay, well, that's somewhat reassuring because I was about to say, I am not selling all my stocks just yet. No need to panic. Really drives home the importance of diversification, though, wouldn't you say?
Oh, absolutely. Slow and steady wins the race, right? Speaking of things that can shake up the markets, though, I feel like we can't not talk about the elephant in the room, which is, the U.S. election.
Yeah, that's definitely looming out there. But here's the thing. The report doesn't seem to think it's going to be a major market disruptor, like no matter who wins.
Really? That's kind of surprising. Everyone seems so braced for, massive volatility.
I know, right? But you look back, both the Biden and Trump presidencies saw pretty decent stock market gains. The bigger worry they highlight is actually fiscal policy, which, let's face it, is kind of a wild card no matter who's in the Oval Office.
Okay, so it's less about the who and more about the what, the policies themselves.
Precisely. They're basically saying, look, both candidates are kind of leaning towards increased spending.
And we all know what that means.
Right. Higher taxes down the road.
Ugh, the dreaded T word.
Hmm.
But hey, forewarned is forearmed, right?
Exactly.
Yeah.
Better to be prepared. It's something to keep in mind, as you're thinking about your long-term financial planning and all that.
For sure. So, just to recap here, we've got inflation that's stickier than we thought, a whole lot of geopolitical what ifs, and an election that could mean, well, bigger tax bills down the line. It's starting to feel like a lot of what ifs, even if the sky's not actually falling.
Yeah, no, there are definitely challenges ahead. No one's denying that. But the whole point of this report, the reason it's got people talking, is that it's trying to look beyond the obvious, right? Find those hidden opportunities that often get overlooked when everyone's focused on, the potential for things to go wrong.
All right, now you've got me really intrigued. Where are these opportunities hiding? What should people be paying attention to if they want it, get ahead of... All right, lay it on me. Where's the treasure map pointing? Where are those hidden gems?
Well, they highlight three key areas they're watching. First up, they see some real potential in what they're calling, get this, unloved assets.
Unloved assets. Okay, I kind of love that already.
Yeah, right. So think things like real estate, particularly non-office properties, and also private equity. These sectors got kind of beaten up when interest rates started going up, so their argument is they might be undervalued right now.
Makes sense. So the bet is those areas are poised for a comeback.
Exactly. The thinking is once interest rates stabilize or, if they ever go back down, the valuations in those areas, they could become really attractive. A window of opportunity, especially for those who got in early.
Got it. Gotta live a little contrarian thinking, right? But for those of us who maybe aren't, venture capitalists, what's the second opportunity they highlight?
So they're suggesting investors might want to take a look at small and mid-cap stocks.
Yeah.
Their argument is these companies, particularly the ones with really solid fundamentals, they've been unfairly punished in the current market.
Interesting. Okay, I'm listening. But why do they think these companies are being overlooked?
Well, they got into the weeds a bit, looked at the actual numbers. They compared free cash flow margins, basically how profitable a company is between those small mid-cap companies and the big, large-cap companies. And what they found is the discount that's being applied to the smaller companies might not be justified.
So it's a chance to get in on the ground floor before everyone else catches on.
That's the idea.
Yeah.
Now, the third opportunity they highlight, this one's a bit more long-term, but with potentially huge, and I mean huge, implications.
Okay, you've officially piqued my interest, Timmy.
The AI revolution. This report, they've spent a lot of time unpacking this, and their takeaway is this is just the tip of the iceberg.
AI is definitely having a moment, that's for sure. But how do they say investors should even begin to think about that?
So they're not talking about quick flips, get-rich-quick schemes. It's more about recognizing that AI is potentially as transformative as the invention of the internet, maybe even more so.
Yeah.
Their modeling actually suggests that AI could end up boosting productivity even more than the combined impact of the personal computer and the internet.
Whoa. Okay, that's a bold statement.
Yeah.
But it's less about chasing the latest AI stock, more about a fundamental shift in how we think about the whole economy.
Exactly. It's about finding those companies, those sectors that are best positioned to really leverage AI to ride that wave.
Okay, that makes a lot of sense. So we've got the unloved assets like real estate and private equity. We've got the chance to potentially find some hidden gems among those smaller companies, and then the really long game of AI. But this report, it's a global outlook, right? What about opportunities outside the U.S.?
Oh, for sure. They don't just stop at the U.S. border. They actually see some really interesting things happening in Europe. Specifically, they highlight that European companies are shifting towards, get this, more shareholder-friendly corporate governance.
Okay, that's got to be a good thing for investors, right? But what does that actually look like on the ground?
Well, they're seeing more share buybacks, which tends to be good news if you're a shareholder. And it kind of signals that companies are, really prioritizing shareholder value.
Interesting. And how does the whole, global economic picture play into their outlook for Europe?
Right. Well, they emphasize that a lot of the big European companies, they're not just playing in Europe, they're global players, which means their fortunes aren't tied to how the European economy is doing. They're benefiting from the same global resilience we were talking about earlier.
Right. Makes sense. Okay, so Europe's on the radar. What about other regions? Any other bright spots they're seeing?
Latin America definitely stood out. They highlight that the region is becoming the critical supplier of a lot of the raw materials that are essential for, well, pretty much everything. The energy transition, all these emerging technologies, they all need these materials, and Latin America is sitting on a lot of them.
Huh. I'll admit, Latin America doesn't usually spring to mind when I think, like, tech investing.
Right. But think about it. They're essential to the whole supply chain lithium for EV batteries, all these other critical minerals. That's all got to come from somewhere. And as the world goes green, the demand for these materials, it's only going to go up.
It's like that saying, right? During a gold rush, sell shovels.
Exactly. And in this case, Latin America's got the shovels.
Okay, last but not least, we got to talk about Asia. Any juicy insights from that part of the world?
They made a really interesting case for Japan. They say that Japan is finally breaking free from like decades of deflation. And on top of that, they're also seeing improvements in corporate governance there.
Wow, Japan shaking off deflation, that's a big deal. That's been a long time coming. What's driving this turnaround?
They point to a few things. Structural reforms, a renewed focus on competitiveness. But the stat that really jumped out at me was this. For the first time in, get this, decades, Japan's nominal GDP growth is actually outpacing China's resistance. That's a massive shift in the global economic landscape.
Yeah, that really puts it into perspective. All right, so we've covered a ton of ground here. To wrap things up, what are the key takeaways our listeners should walk away with?
I think the biggest one is this. Even with all the uncertainty in the world, there are reasons to be optimistic. This report, it's a good reminder that the doom and gloom narrative, it's not the only narrative. Sometimes you got to look beyond the headlines, dig a little deeper to find the opportunities that are out there.
Love that. It's all about perspective, right?
Yeah.
And being willing to challenge our assumptions.
Exactly. And that's what I love about these deep dives, We're not just summarizing a report, we're encouraging people to think critically, to really engage with the forces that are shaping our world.
Couldn't have said it better myself. And on that note, a huge thank you to you for joining me for this surprisingly optimistic deep dive into the global economy. And to our listeners, remember, knowledge is power, so keep learning, keep asking questions, and keep diving deep. Until next time, everybody.